Welcome everybody. Thank you for attending our webinar, Making Money in the New Normal. We've done a few of these now, and each time we do them, we try and team up with some really good other speakers as well. So we've done this one in association with BBN, I think some of you might know, and also the Do Academy. The one thing that my amazing admin manager, Gemma, tells me that I must do is tell you all about the Q&A box. If you just click on the Q&A box, type any questions you've got in there, then we'll answer those at the end, and after the webinar I won't get told off. These are today's speakers. That's me in a tie. I used to wear that 4 or 5 months ago, I think was about the last time that I did that. And I'm going to be talking about what your break-even point is, and then later on, sales and marketing strategies and strategic planning. Emma White is our Deputy Managing Partner. She's going to be talking about your cash flow in the short term, medium term, and what you're going to need to fund growth, and the critical importance of cloud accounting. One of our guest speakers today, Mary Eniolu, will be talking about team building for success and a number of leadership issues. And Brian Wakefield will be discussing the do's and don'ts of networking. So here's the big question. Is your business ready to make money after everything that's gone on in the last 4 months? Here's some questions that you've never expected to be asking. Who do I bring back from furlough? Well, 4 months ago, I thought that furloughing was something that only happened in the United States when the Democrats and the Republicans couldn't agree their budget. And within about 3 weeks, my team were all experts on it. And one of my partners, Josh Curtis, knows all the ins and outs of everything to do with furlough. And so, any questions on that, throw them at us, and I'll introduce you to Josh. Who do you make redundant? I think a report came out today said that 1/3 of companies are considering redundancies, and I think there'll probably be more than that actually. Most businesses are going to have some kind of downturn, and there's some tricky decisions that have got to be made. And also, I'm at my real break-even point. We've had, I know we've been problems with Brexit, but generally speaking, most businesses have been okay. So I'm going to just do a little whistle-stop tour through break-even point. So here's just a little example. What are your monthly costs? This is personally. So just an example, it costs you £3,000 a month to live. How much other income have you got coming in? Maybe some income from a rental property, from your spouse or grown-up children or whatever. So that would mean that you've got to get £2,325 per month coming from your business. If that's what you've got to get coming from your business, there's also going to be some dividend tax, which will have to be on top of that, £175, meaning that the dividends that will need to come from your company will be £2,500 a month, or £30,000 per annum. So a break-even calculation is literally just like a profit and loss account in reverse. The net profit that you've got to make must cover the dividends. So in this example, exactly the same figure, hopefully a little bit higher, so that you can build up some reserves to pay off any debts that you've built up in the last 4 months. And if that's what your net profit is going to be, that will be 7,037 will be what your tax is going to be. That means that your actual profit before tax will be 37,037. If you've got overheads of 30 grand a year, that means that your gross profit is going to need to be 67,000. And if your gross profit margin is 35%, that means your turnover will need to be 191,534. So I told you it was going to be whistle stop. If any of our clients out there want us to do that calculation for you, more than happy to do it. What we think is more significant though is to drill that down into what we call the average daily turnover, because some of these problems need to be addressed now. Even the best management accounts can take 2 or 3 weeks after the end of the month until they're available. And by that time, you might have been below break-even point with all sorts of problems building up for 7 weeks. So average daily turnover. If we've got 250 working days, that means you've got to do £766 per day. And we've got clients that will measure that every single week. They'll work out what the weekly turnover is divided by the number of working days. You know, sometimes it might be 5, most times it might be 5, occasionally 4. That's what they need to do. And then just compare that to the weekly sales figures every Monday. Have a discussion about it, have an argument about it, you know, work out what you should be doing differently, what's going well, do more of it, what's going badly, do less of it, tweak things, push people. You know, it's going to be a tough 18 months, and being able to make those decisions, bang, 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 every single week, keep making those little changes. That's what will turn your business into a success and get you through this difficult time. But if your financial reporting is not good enough, then this is the lady that you need to speak to. So I will introduce my our Deputy Managing Partner, Emma White, for the next part of our presentation. See you in a bit.
Thanks very much, Malcolm. Let me just get my presentation on. Oh, goodness. Right, so I'm just going to talk to you a little bit about streamlining your finances and improving your cash flow, because for many of you, the whole furlough, the grants, the loans, that has pushed a lot of the problems just further into later this year, Q1 of next year. And it's just important for you to now know what is coming rather than sort of just blindly fall upon this big cash flow problem that might hit. So for a lot of you, you know, if you have been coming out of furlough and starting to retrade again, stock levels might need repleting, supplier payments might need catching up before they'll work with you. Obviously, you've got to deal with the fact that you're going to start having to contribute towards staff's wages a little bit more than you have been. For a lot of businesses, your corporation tax, you know, March year ends, corp tax is due 1st of January. And you've also got the fact that you've been allowed to defer your July payment on account for personal tax to the end of January, along with the fact that you've got to catch up on that by March. So as you can see, a lot of the things are sort of being pushed towards the Q1 of next year, and then Q2 and 3, the bounce back loans or any lending you've taken is going to start kicking in. So it's really important to be completely on top of your cash flow. So one of the tools we use for clients is A4G's 5-minute cash flow tool. And what that does is just take a snapshot of your cash flow and what you should have set aside for liabilities. So as you can see here, it takes into account all your bank accounts, your overdraft, any facilities you've got. Then it will look at what you should have set aside. So what should you be putting aside each month for your corporation tax and your VAT that's quarterly, and maybe your personal tax if you tend to take that as an additional draw. And it takes into account all those things. And so then this tells us any other arrear payments you've got to catch up on. So that said, we've got £50,000 now. What should we have set aside? We should have 86 set aside. We've got a shortfall of 36,000. Now that's not unusual for businesses to use their kind of tax and things to trade as part of their working capital, but you do need to be aware if the deadlines are getting nearer and this shortfall is getting bigger and bigger. So we do this for clients on a monthly basis just to give you an idea of your cash flow patterns, because it might be that actually the same time last year you had exactly the same thing, so you can rest comfortably knowing that, yeah, this is what normally happens in July, but we catch it up by the time the tax is due. But you need to have confidence in knowing that. Otherwise, all that happens is you have sleepless nights as a director. I will not tell you the amount of times clients say to me, I really can't settle at night. I'm just worrying about things. And it's the unknown stuff we worry about. So if it's known, you can plan for it and have action. So I'm going to take you through streamlining your finance, because this is really, really important now. If you're not on a cloud accounting system, getting up-to-date information, you are behind your competition in terms of knowing where you are, knowing what money you're making, and what you can influence to change the amount of profit you're generating. So I would look at speeding up your invoices by using a cloud accounting system where you can do online invoices. You can then link that to payment methods, make it really clear, big pay it now buttons. And that might link to like a direct debit system or a card system like Go Cardless. And then a lot of these systems have automated debtor chasing that you can add in as well, which just helps all those little early reminders go out. So the one we would recommend and we work with is Fluidly. So you can set it up to send a nice little email a few days before an invoice is due, just to say, hi customer, hope everything's going okay. Just to remind you that this invoice is due for payment in 3 days. Please make sure it's in your payment run. And then again, the standard chasing you do, that normally someone's typing out an email saying exactly the same thing to all the people that are now 10, 15 days past the deadline. You can just send a statement with a standard email at a time that suits you, and just keep those polite chases going. And then it gives whoever's doing credit control the time to focus on the clients that need a bit of a discussion, that you need to do a bit of negotiation with or organise a payment term. And then you also know who are the best people to take your orders from, because if someone's not paying you, you don't want to be prioritising their work over a good paying customer. So Fluidly, it does the automatic debt chasing, and it also helps you forecast cash flow into the future based on actual payment dates. So it would look at your customer, it might look at customer A, say customer A pays you on 45 days, so we'll forecast all their invoices to be paid on the 45 days. Customer B might be 60 days, and it will forecast that in. So it's not a case of looking at your debtor book thinking, all right, I'm going to get all that in 30 days, because you might not. It will actually adapt to the patterns of your customers and suppliers. So it gives you sort of quite much more accurate forecasting, just to help you feel your way through the next year, really. And then we'd look at improving sort of the way your purchase invoices go into your system. So we'd look at sort of automating data just to make it more consistent and just reduce the time in getting some of this stuff into your accounts package, doing expense claims online so it all goes straight in for approval. So we work with 2 packages sort of combined, which is Receipt Bank, which is a capturing program. So you can scan, forward emails, take pictures, or link it to certain suppliers' accounts where it will take the invoices from it into your software automatically. And if you are used to passing bits of paper around the office to get various people's approval for purchase or invoices, we would use Approval Max. So we actually use that for sales invoice approval and purchase invoice approval, where you have that multi-layer approval system. One, it's much quicker. This stuff's all on people's phones, tablets. You can see where paperwork is rather than having to chase down an invoice that was put on someone's desk and they're only part-time at the moment, so it's been ignored. It really gives you clear sight of what you're doing and just speeds up that whole process so you can get your month-end figures really quickly for you. And then obviously the reason I like a lot of the cloud accounting softwares, and we work with Xero predominantly because it's just a cut above some of the other softwares out there, but the way they report, so you can look at your combined profit and loss, you can look at profit and loss on projects, you can look at this July compared to last July, or you can look at each of the months. You can split it down per sales driver or per activity, and then you really get to the heart of your business and where the sales are coming from and where the profit's coming from. Because I have known clients where we've put this in place and actually they've realised that one of the activities they do is loss making and being topped up by the other part. Well, the worst thing you could be doing at the moment is focusing on the non-profitable part of your business. So this stuff is really key now. So obviously what do you need to do? You need to understand your cash flow pattern. So it's a bit of looking at history so you know how comfortable you can be with your cash now position. You need to know your cash now position and what debts you've kind of got accruing with all of these delayed payments. You need to look to really streamline your finance and really put some importance on getting those numbers up to date regularly. so you're not basing decisions on gut feel, you're basing them on the facts of your business, and you can really drill down into some of this stuff. But then also you can look at forecasting. So forecasting for different scenarios. I mean, some of you will be in a position where, I mean, I certainly, you know, if you were running a pub right now, you know, at what percentage of normal business can you survive? And at what percentage are you actually in trouble and you need to make some cuts? You know, being able to scenario plan like that is really useful. And for some of my clients, they're looking at it as well about sort of acquisitions. If I brought that amount of business in or did a bit of a merger with someone, what would that look like? And what would the cost savings be for everyone? So by using online accounting software, you can really get more insight into your business and just plan a little bit easier, rather than spending hours and hours trying to do Excel sheets and then having to redo them when the scenario changes. So as I said, we absolutely love Xero, but one of the reasons we love Xero is it's not a case of swapping an accounting software for another accounting software. So we've traditionally worked with Sage, but the reason we love Xero is you can bolt in industry specific apps, and there are hundreds and hundreds out there that just help make your whole business flow a little bit better, avoid duplication of data, and are specific to your industry. So what we do for our clients, we sort of give personalised one-to-one demos, and we do individual setup and training, because each business and the importance of numbers that you look at is bespoke to you. We can design certain reports, and we also look with some of our clients on scoping documents, which is walking through the whole kind of client relationship management process through to the numbers and looking at how that can all be streamlined together just to improve your customer experience. So I'm now going to hand over to Mary. Thanks very much.
Okay, is that better? Yes, sorry about that, everyone. So I'm going to start again. So I'm Mary Enyolu from Do Academy. I'm a trainer and a coach, and I help business owners to develop their most valuable assets, them and their team members. You can see the Institute of Leadership and Management logo on the screen there. That's because our training and coaching programs are approved by the ILM. I'm also a member of the JOHN MAXWELL team. We're the largest training and coaching organization in the world with over 30,000 trainers and coaches. And our founder, John Maxwell, has been in the leadership space for over 40 years, has written over 100 books on leadership. I'm sure you can Google him to find out more about him. Now, today we're talking about team building for success. I can't talk about team building in the short time I've got, but still I just want to share some thoughts with you that I hope will help. As we're all coming out of COVID-19, I think as business owners, we need to be more intentional and more strategic in building our teams. We need to bear in mind our people have gone through tough times. Some people have suffered bereavement, loss. Some people have had time to reflect on their lives and thank you. Some people have had time to reflect on their lives and think about their values, you know. So people are going to be coming back and it's almost like you're forming a new team. So how are you going to get a strong, cohesive team together? Because that's important for your business. And this afternoon, we're just going to talk a little bit about that. So what's the big deal? I think we all know what the big deal is, but I've just put some points on the slides there. I'm not going to go through all of them. But the first thing to bear in mind is one is too small a number to achieve anything of significance. So especially if you're building a really big vision, if you've got a big vision for your company, then the more intentional you have to be in building your team, because you're going to need a strong team to bring that vision pass. So I've got some points there. Like I said, I'm not going to go through all of them. I think the slides will be made available so you can go through the benefits of having a powerful team. What I want to really dwell on this afternoon is how we go about creating a strong team. And I've got 5 points I'm going to quickly share with you. So first thing I want to say is choosing the team members. How do you go about that? Because the fact that somebody is brilliant in themselves and in what they do does not mean they will do well in your team. So we have obviously the obvious things like qualification, experience, which you get from their CVs. But how do you look at the attitude of the person? How do you evaluate that? I heard Angela Arendt speaking once. She was the former CEO of Burberry and former senior vice president of Apple Retail. And she said, when those bright-eyed youths come into Apple Retail, you know, they're all excited. She says, I put their CV aside and I say to them, just talk to me. You've come this far in the selection process because you're brilliant. I know you're brilliant, but I want you to talk to me. Tell me about your passions. Tell me about your dreams. Tell me about your aspirations. Because if I can just place you in the right position within this firm, I know you'll thrive. So I think we need to think about the selection process and how we get people on our teams just to make sure that they're the right people for our teams. The other thing is placing the team members. So we all have different personalities, we all have different drives, things that motivate us, and it's quite important that you play to the strengths of your team members. Again, they could be brilliant in themselves, but if you put them in the wrong position, they will not perform, and you will just think it's because of the person, not necessarily. So they may just have been put in the wrong position, and I'm going to come back to this at the end of my presentation as well. I always talk about DISC when I talk to my clients, because the DISC personality assessment is a great tool to help the team members to become more aware of themselves and their personalities, but also to help the decision maker, the business owner, to make decisions as to where to place them and to communicate better with their teams. It's a really, really great tool. I would encourage all business owners to do a DISC personality assessment on all of their staff. Because sometimes as a business owner, you're casting a vision and you're wondering why some people are not getting it. They're disinterested, they're not motivated. You just need to understand people are different. There are different things that motivate different people. Some people are goal orientated. You cast the vision, they see it, you paint the picture, and off they go. Others want detailed plans. They want to know the A to the B to the C to the D. Still others are people. They want to know, how does it affect the other department? How is it going to affect this person or the other? So the DISC personality assessment tool, I think, is a great tool for us to be able to do all of that. Right, so I had a video there, which I'm not going to play. The third point is getting your team on board. It's great to have a fantastic team on paper. Every single person has their strengths. Every single person, you know, seems like a great team player. But to actually get them on board in your company and getting them to buy into your vision, to own the vision, is a different thing. So you have to be skilled in being able to move the vision from me to we. When people feel like they have a stake at something or a stake in something, then they're more committed and you get more from them. Now, like I said, one of the ways you do that is to cast the vision effectively. That's very important. But also, it's about giving people credit. You know, if the team has worked hard, there's some leaders who will take all the credit for themselves and they will place all the blame on their team. I mean, there's nothing as demoralizing as that for a team where everybody feels like they've contributed, but all they're getting is a slap all the time. So I think it's quite important for leaders to share the credit, to give people, sorry, that slide was supposed to go after the video, and it just shows what could happen to you as a leader where you're not sharing credit. You will just find yourself playing by yourself. And that slide just says great leaders give others credit, and they're quick to share the blame. The question is whether we are prepared to be that sort of leader, whether we have enough security in ourselves to be willing to share the credit with our team members. Number 4, cultivating a productive culture, investing in your greatest assets. We all say our people are our greatest assets, but sometimes I think we forget in the way that we deal with them, in the way that we engage with them, in the way we invest in them. And I think one of the ways that you can really show that you consider your team members to be your greatest assets is that you invest in them. Just like any other asset you have, if you think about it, the assets you have, what you consider to be assets, you invest in them. Somebody said, what if we develop our people and they leave? Well, the question is, what if you don't develop them and they stay? So investing in the personal growth of your people, I think it's extremely important. It's something I'm particularly passionate about, not just about their skills, the skill set they use right now in your business, but developing them as an individual, as a person. That's very important. Trusting people as well, trusting them even before they prove themselves. People will live up to the expectation that you place on them. And creating an environment where people feel like it's okay, it's safe to make mistakes as long as you're learning from them, rather than this blaming and shaming culture. I think if you want to create a productive work culture for your people, you have to bear all these things in mind. And number 5, dealing with the elephant in the room. One bad apple is one too many. I love this quote. It says, a bad attitude is like a flat tire. You can't get very far until you change it. And it's absolutely true. I know of businesses where just one manager is just really behaving badly and they're losing good people, but the leadership never feel the need, or maybe just don't get the courage to address the problem. Attitude is very important. It's great to have good skills and to be able to do your job properly, but if you have a bad attitude, it's definitely not a good thing for the team, and that team is not going to be strong because of the low morale. People are not going to give their best. So I've got the CAC of attitude. Number 1, it's your choice. Just some facts about attitude. It's your choice. It's your choice to be happy. It's your choice to be sad. Somebody could upset you, but it's your choice how you respond to that. We tend to blame our attitude on other people. They made me do it. See what you made me do. Nobody makes anybody do anything. We all have a choice in how we respond to whatever happens. So number 1, attitude is your choice. It determines your altitude. That's previous slide already alluded to that. It says you can't get anywhere with a bad tire. So it will determine your altitude. And number 3, it's contagious. If you think about all the things that go, or the elements that go towards making a great team, experience, perhaps the skills, the talents, the training that the team members have, there's only one that is contagious: attitude. Obviously, the attitude of the team members will determine whether they succeed or not, but attitude is the one that is contagious. If you move into a room, you don't need to say anything for everybody to catch your attitude. So it's something that cannot be ignored. It has to be dealt with. The definition of a nightmare is to have a big dream with a bad team. So as I round up my slide, I just want to share very quickly, have 1 minute, a story of somebody I met recently. She's a bookkeeper, joined this company as a bookkeeper, got bored, left, and then decided, oh, I want to come back, called up the managing partner and said, can you find a position for me? The managing partner found her another position. A few months later, she was bored again and again had a chat. And this time the manager placed her in a position where she's now thriving. And now she is the referral marketing manager for the business. What that says to me very quickly is that manager cared about his staff. It wasn't just about, I will need to fill this position, do your job and don't complain. But he cared about his staff. And this lady spent about 5-10 minutes to me telling me about how wonderful her company is. Now, if I was looking for an accountant to do my books or to do work for me, I would be instructing this firm, because they had a member of staff who was who was bragging on them without being paid for it. Now think about the number of staff you have, 10, 50, 100. Every single one of them could be a salesperson for you if you treat them right. And I'm pleased to say the company I'm talking about is a company hosting this seminar, A4G. I would trust them with my accounting business, because if they care for their staff, guess what? They would care for their clients. Thank you very much. I'm going to stop sharing my screen now.
Brilliant. Thank you for that, Mary. That was, as Mary was starting to tell that story, I was thinking this sounds a little bit familiar here, and I wasn't aware that she was going to say that. So that's very kind of you to say that. So let me just quickly share my screens. If you've got the finances right, your cash flow, etc., and you've got your team on board, then you're ready to go. You know, no matter how tough it's been the last few months, how tough it's going to be the next few months, then you should be able to get back in business really. Critical to that is going to be to get that sales and marketing right. I know that there are many businesses, many of you that are watching this have probably not had to do that much sales and marketing, but work has come to you, you know, you're good at what you do, people tell other people about you, the work finds you, there's been plenty of it out there. But that whole supply and demand dynamic is going to be changing over the next couple of years until we've sort of worked our way through all of this. So what's critical to that is getting your strategy right in the first place. The number one thing that you need to have is a good database. Now, you know, this doesn't have to be expensive. You haven't got to spend huge amounts designing something. There are tons of little bits of software out there that will be, you know, ideal for your business. Some of them might even be industry specific, so they link in with other things. There's quite a few database packages that will link with Xero, so that information that is on the sales and marketing information will be the same as is on your account system and sales ledger, etc. If you don't do that, then you've got nowhere for storing all that information about potential customers, and it's so easy to put in loads of work into all this and just find that leads are going cold and you've not got a way of following them up easily. So the next thing to think about is, are you capturing potential customers' details? And this stuff comes into you in lots of different ways. Brian's going to be talking about networking a little bit later in the presentation. And one of the best tips that I was given when I started going networking was to just have my business cards in one side pocket of my jacket and put the other people's business cards that I was talking to in the other side. And of course, that was when we wore jackets and when we did actually shake hands with people. But when those cards came back to the office, we then get them onto the database. Leads will come in to the business through the website. You know, is that information finding its way onto your database? Other information, other leads will come through, maybe on the phone. One of my clients just has a very simple little pad that they've got by the phones where when they're talking to somebody, taking an order or whatever, or just an inquiry, they're taking that information, writing it down, and it will go through to somebody in the admin department, gets it on the database. So this stuff is critical. You've got to be ready for whatever marketing you're going to do. And then you need to think about which of the three main marketing strategies are right for you. It may just be one of them, or it may be a sort of a mix between the three, heavy on one. You know, different things suit different people, different things suit different industries, different products. So let's just have a quick run through those three. The first one is what we would call inbound. Now, historically, inbound marketing would be all about advertising, you know, getting that ad in the yellow pages, the local flyer that goes through people's doors, on the side of a bus, wherever it was, and then people would come to your premises or ring you up or whatever. Of course, you know, these days it's all about Google, so search engine optimization is critical in all of this. And you know, there's some pretty simple things that that you can do to get people to find you. You know, one of the things that everybody seems to forget is that more than 50% of searches when people are looking for a business are local. They will put the name of the place where they are, or you know, if it's something that's a little bit more niche, maybe a county, into that search bar. So your website needs to feature that location quite heavily. And then you just need to think about the sort of things that people will be looking for. Do those words appear on your website? Are they in the meta tags, keywords, etc.? We've got a fantastic inbound marketing manager at our firm who does all of our stuff and also does some of the work for clients. So Aisha Kaibasi is her name. If you want her details, give me just ping me an email and I'll introduce you. The next thing is, if they do find you, what will they actually find? Will they find some archaic, out-of-date website that makes you look old-fashioned, makes you look a bit messy? Accountants' websites, obviously I spend hours looking at them, but a lot of them don't have any pictures of the people that work in the organisation, or the pictures that are on there are clearly not their members of staff. So it's about people by people, and you want to try and get an impression across to these potential customers that you are the sort of person that they want to deal with. So the next thing is that there needs to be a call to action. So a simple call to action or an article on your website might just be call this number, email this person, or you might be a bit more sophisticated with it and actually have an inquiries box. It could be a little freebie that you're giving away, some kind of checklist or just a sample of your product, but people have to put their information in to get that. So that's the call to action. And then of course that fits in with what I was talking about before about the database, about capturing that data and get it back onto your database so that you can contact them later. And then lastly, there is social media. Now, you may notice I've put a question mark at the end of that. And the reason I put a question mark at the end of that is because a lot of, there's so much information about social media and what it can do, but actually for your business, it might be right, or it might not represent a good return on investment. You only hear about the good stories and the big success stories with social media. You don't hear about the hundreds of hours that people put into the stuff without ever getting anything. And you need to think about what is the most appropriate route to go. So if you're selling something that is very visual, it might be jewellery or wedding dresses or, haircuts even, Instagram is a great place to go for that. If it's quite sort of local and you're looking for people to refer you, Facebook works quite well. If it's a professional and you're looking for other professionals, then go with LinkedIn. Find the thing that works for you, the thing that gets you the best return on investment. So the next type of marketing is what we call outbound. So this is stuff that where you are going and finding those customers, getting yourself out there. That could be knocking on doors, although, I dare say that's probably not appropriate for your business, but it might be mail shots. There is still a place for a well-written mail shot that lands, as one of my staff said the other day, who doesn't like opening a piece of post and finding something interesting in it, because 20 years ago we were inundated with loads of stuff. Nowadays post is a rarity because we're inundated with emails. So a physical mail shot might work. Alternatively, some kind of e-shot. Now you can do this scattergun approach where you just send it out loads and loads of stuff to absolutely everybody. And if it's not relevant to them, then they will probably do right-click, junk, block sender, and your well-crafted email has just become spam. And one of the key things is to get the subject line right. We've made that mistake ourselves in the past. I try and put the subject in the subject line so that if it's one of my clients or potential clients sees that subject and thinks that's relevant to me, they'll open it. If they see it and it's not relevant to them, they won't open it. I haven't wasted their time. And the last thing to think about is telemarketing. This often works quite well with some kind of mail shot campaign where you're actually ringing people up. You've got to be aware of the rules of telephone preference service and get all that stuff right so you don't find yourself on the wrong side of the law. But again, a well-worked telemarketing campaign, along with a few other things, can start to generate some good leads. And then the third part, which is forgotten about so much by most businesses is referral marketing. And Mary kindly referred to referral marketing manager, Amanda Stoneham, and Amanda's job is to build relationships with other parties who will refer us. You know, a lot of your business will have come from word of mouth and referral, but you're probably not doing anything to encourage it. So a simple thing that you can do is at the end of a piece of work, just ask the customer, are they happy with that work? And if they say that they're happy with it, just say, well, you know, we're looking to grow our business, you know, and if there's anybody that you could refer to us, we'd be really grateful. And happy customers will do that for you. The second thing you can do is find third parties who are in complementary fields. So it could be that they just simply have the same sort of clients that you do. So an example of a really good referral marketing program that we helped with in the past was a coach business that had that basically did coach trips for mainly older people, and a financial advisor whose clients were mostly older, retired people. So same customers. So just a nice little letter went out to the customer saying, I'd just like to introduce you to, and that generated some good work for the financial advisor. But it might be that it's a bit closer than that these are things where perhaps you overlap slightly. So the plumber and the electrician and the carpenter and those sort of building professions, you know, you should have those other professionals that you know, meet them occasionally, talk to them, ask them to refer you. Most importantly, find out how you can help them, because you know, if they're giving you work all the time, then you know they're going to soon give up doing that if you're not giving them something back in return. So referral marketing is often represents the best return on investment. And of course, one of the staple parts of all of this is networking and getting yourself out there face to face and finding some of those other professionals that you want to work with. So I'm going to mute myself now, stop sharing, and introduce you to Brian Wakefield of BBN, who's going to discuss the do's and don'ts of networking.
Thanks very much, Malcolm. I just saw in the group chat actually that we're running ahead of time. So the good news is that for the next 4.5 hours, I can talk about networking. So that's a joke, everybody. So you can relax. So times have changed, haven't they? So many people have said to me, networking is now the single most important part of their activity, of their marketing mix. It's really where they get the bulk of their business. Some people have spent thousands of pounds on websites, advertising, marketing material and other efforts. Do you put the same level of financial investment into networking? Probably not. But the good thing is you don't need to. You do need to invest some time. Now, time's one thing you can't make any more of, so use it wisely and make it count. How do you do that? It used to be in the back in the bad old days, you'd see people walk into a networking room, really with the attitude and mindset that who can I sell something to in here? And you used to hear the stories, I went to that meeting, went once, didn't get anything from it, don't go anymore. That doesn't happen with us, of course, but I'm pleased to say that it doesn't really exist too much anymore. Times have moved on. If you think about it, if everybody's focusing on trying to sell, wouldn't that be quite an unpleasant environment? 30, 40, 50 people in the room all trying to sell stuff. Wouldn't be a lot of fun. It'd be tedious. And also, if everybody's trying to do the selling, who's doing the buying? It's just not going to work. So now it's just not about selling. It's really about collaboration, helping, supporting, connections. It's about relationships. So we're a very, very relationship-based network group, really. Networking is very much like business. It gets done in one of two ways. It's either transactional or it's relationship-based. Transaction, you do the deal, job done, walk away. tends to be fairly short-lived. Relationship-based business tends to last much, much longer. So hence the emphasis on relationships. So we need to flip the attitude, walk in with not who can I sell to, but who can I help in here? How can I help them? Well, you can do that in various ways. It might be with some information, it might be with some advice, it might be with a contact, a connection. You're helping them. If you take the time to listen and to get to know people, you will get to understand how you can help them. You'll be much, much better placed to help them in some way. What will that do for you? You'll become a respected and valuable member of the group, a go-to person, and who doesn't want to be known as that? Malcolm said earlier, people by people. I just believe that will become more and more prevalent as we move out of what we've just gone through and we move on. Last 4 months, excuse me, it's very much know, like and trust. So if people know you, they like you and they trust you, they're much more likely to do business with you, and they're much more likely to refer and recommend you. So that's worth thinking about. Why is that important? Well, you should be thinking of people in your group. They're your fellow members when it comes to business. So you want them to think of you too. So it's givers gain, what goes around comes around. Always remember though, that it's not just them, it's the people that they know. Business associates, clients, friends, work colleagues, who can they hook you up with? We've all heard the saying, it's not what you know, it's who you know. And there is an element of truth to that. But I think what's more important is better than that. It's not who you know, it's who knows you. Although you do want them to know you for the right reasons. So if a job's worth doing, it's worth doing well, and it's worth doing properly. So take networking seriously, because it can be a serious business. Networking isn't a tick box exercise. Really, the aim isn't to attend as many groups as you can, flying around, arriving late, leaving early, lack of engagement. The chances are, if you do that, you won't do any of them well, and you'll become a jack of all trades and master of none. So that's worth thinking about. You do need time to follow up. It's a time in between the meetings that's just as important, if not more so. The meetings are just a showcase for you to get things started. So you need to follow up, you need to action, and that's an opportunity for you to build relationships. It's all about the balance. So my advice to you, if you're looking at getting involved in networking, is to visit 2 or 3 groups, decide on the ones you like, the one that fits you best, plug in properly and do it well. So it's not just the meeting itself, it is the time in between that's important. So stay engaged, build further, either through face-to-face meetings or through social media. So you need to look at the tools that are available to you. Does your networking group have a Facebook group? Are you connected to your fellow members through LinkedIn? You should be, and use those and engage with those. It's I keep saying the word engagement. It's just so important. It goes both ways. So don't just find a group, slap a sales post in there or an event post and then walk away. Ask questions, engage, respond, work with your fellow members, because like many things, you don't have to do it on your own. We're stronger together. Don't just turn up and expect everything to happen and fall into your lap. Like anything, you get out of it what you put in. So if you just keep taking, eventually that will break and it will fail. So what do you do for your group? Think about that. Ask yourself that. Do you get involved and help on the day? Is there something else you can do to ensure the smooth running of the event, make the experience better? Do you help people to, do you make them feel welcome? Do you help them feel at ease? Do you make an effort to introduce the group to people and encourage them to attend? Or do you just expect everyone else to do that? So you need to be active and proactive. Again, if you just sit there expecting everybody else to invite people and tell them about it, they're thinking the same as you, it probably won't happen. So basically, you're working, display the same qualities you do in business and expect to see in others. So be regular, be consistent, be committed, and be reliable. Reliability is just such an old-fashioned trait, but it's just so important. Everybody wants people to be reliable. I remember an old saying, you can make money or you can make excuses, you can't make both. And that still rings true today for me. So, okay, scenario, you've made the decision, you've decided which group to join, put the meeting dates into your diary, stick to them, be committed. Don't be the one that's known for excuses. You're too busy, you forgot, something else came up, I had hiccups. Trust me, I've heard them all over the years, every type of excuse, but you're kind of fooling yourself more than anything, and you will become known as that person. These are the people that you want to use and refer you. So how likely are they to do that if you've kind of tarred yourself with a brush of being unreliable and inconsistent? So not very, I would suggest they're less likely. So it's also disrespectful to the group. You're basically saying to them, well, I had something better and more important to do than spend time with you. So don't expect any different back. You will get out what you put in. Never alienate people. Never make snap judgments. I know you only get one chance to make a first impression, but there's often a little bit more to that. Don't alienate people and disregard them, or worse still, make an enemy, because you just never know who or what they could connect you to. You just need to get to know them well. We all want friends. We gain from friends, don't we? We gain nothing from having enemies. So basically, 3 of my favourites to leave you with is not who you know, it's who knows you. The opposite of networking is not working. And I've never heard anybody say you can't have fun while doing business. Have some fun at your networking. Enjoy it, love it. If you're doing something that you love for a living, it won't feel like work, and you'll never have to actually work another day in your life. And that's a great mindset to have. I run the BBN networking group because I love it. It's rewarding, it's satisfying. I love helping people and watching them grow. It's really, really rewarding. So I'm Brian Wakefield from the BBN networking group, the networking group that loves you more than your own mother, and we love it if you love us back. So thanks for listening, everybody. I hope you found some of that useful. Back over to Malcolm.
What's happening? Hopefully everyone can hear me. I'm just going to stop sharing. Right, sorry about that. For some reason, whilst I was screen sharing, it wouldn't let me put the video back on. So I'll go back to screen sharing again, and there we are. Okay, thanks, Brian. That was really good. Amanda speaks really highly about BBN and all the contacts that she's made, and you know, business-wise, being a member of BBN for A4G has been really good for us. So if you get the marketing right, then the next thing that you need to get right is the sales. So you can have as many leads as you like. If you're not able to turn those into sales, then that's not going to be very good for your top or bottom line, really. And I read quite a few sales books. It was probably about 20 years ago now. Funnily enough, they don't teach you much about sales when you pass all your professional accountancy exams. I don't know why that is. But once I've read 2 or 3 of these books, I suddenly realised that basically they all say the same thing. They may use buzzwords and have different, you know, ways of doing things, but it all comes down to 4 key elements. So the first element is preparation. Who are you going to see? What are you likely to be talking about? Have you got the right marketing materials with you? Do you know enough about the company that you're seeing? Do you know where to park when you get there? You know, you can easily end up 10-15 minutes late for a meeting because there wasn't available parking and you haven't asked about it. The next part, which is the most important part of all, is the needs analysis. Now, I call this selling by being nice. So it's just simply asking lots of questions. If I'm meeting a potential client for the first time, almost inevitably I will ask them, how's business at the moment? You know, now I may have an idea about that already, but that idea could be wrong. You know, it could feel like they're pretty quiet. I went to one potential client and I noticed that they've got quite a few vans parked outside. So I thought, wow, you know, things must be a bit of a problem, not enough work at the moment. And so, you know, asked them a question about the vans. They said, no, there's no problem getting work. We can't get the guys to actually do the work. Our problem is all to do with recruitment. So find out some sort of general stuff about the business and then start to go a little bit more specific. It's really important to listen to what it is that people need or want. It may be that you haven't got anything that you can actually provide to them that will help them with that need or want. It may be that actually the best you can do for them is to refer in someone you know in a different profession. Well, you know, even that is a positive because that person you've referred in will hopefully refer you back in a similar situation. So all about asking the questions and starting to drill down to some of the more detailed things and really understand it. You know, you'll know if you're asking too many questions. People's answers will just get shorter and shorter and shorter, and to the point where you realise you're annoying them. But there will come a point when there's just sort of a pause in the meeting, and at that point, you know that it's now your time to do this next part, which is the solutions presentation. So this is when you've got your opportunity to demonstrate to them how your product or service or whatever it is going to meet their need or want. So, you know, we've all got this image in the 50s of the door-to-door salesman who'd, you know, throw all the dust on the carpet and then show how good the vacuum cleaner was cleaning all that up. You know, that is the solutions presentation. I'm sure your products are a bit more sophisticated than that. So you've presented the solutions to them. Now what you need to do is close. And so many people that have not had any formal sales training forget this part. And it can be quite easy. A really good friend of mine, his closing technique is, so do you want it or not? That's all he says. Do you want it or not? And he said he's hardly ever offended anybody by saying that, and most of the time people will buy. But you know, it may be it needs to be a little bit more sophisticated. So those are the 4 stages of the sales process. The next thing you need to do, business-wise, is turn everything we've learned today into some kind of strategic plan. So first question that you should be asking yourself is, where do you want to be in 2 years' time? And when I've done strategic planning with people, I've not used to do this as 5 years, but in the current environment, climate, all the problems we've got, 5 years is just too far in distance. Let's just think about 2 years. Could be just about survival. So, you know, that might be the turnover, the profit. It could be your involvement in the business. Perhaps you want to take a bit more of a back seat. It could be that you want some major achievement to be the biggest in your industry, or win an award, or move to bigger premises. You know, that whatever it is, where do you want the business to be in 2 years' time? The next thing is, where are you now? And the best answer I ever had in a strategic planning session was, we are a complete and utter bloody shambles. And that really took me back by surprise, because this was a client we worked with for a couple of years, dealing with all their accounts and their financial stuff. And I thought that they were a really well-organised business. But actually, it was just their financial affairs that were really well organised, because the guy that oversaw that in the business was you know, was quite pedantic and well organised, and the rest of the business was indeed a complete and utter bloody shambles, and they told me all sorts of horror stories about it. So we know where we are now, we know where we want to be. The next question you're going to ask is, what do you need to do to get from where you are now to where you want to be? And people will have their own ideas on this. You know, our skills as a facilitator is sometimes to act as a referee between the two directors in the business, or maybe more. You know, I did one of these many years ago where there was 5 directors, you know, and got 5 opinions on everything. And it took a long time to sort of work through some of these issues. In a whole day's session, you know, we would go through at this point all the different aspects of the business, their marketing strategy, their recruitment strategy, their systems, leadership issues, finances, etc., etc. In a shorter session, we'll just sort of keep that down to sort of 1 question per issue, really. And just because we might not have all the answers, but we do have the right questions. And from asking those, we can get all those answers from you. And that enables us to start to build up a little plan. But plans are no good if there are things that are stopping you. So the next thing is to ask, what's stopping you from doing those things? It could just be time, it could be people, it could be something really simple, just getting some basic systems in place for a routine activity that massively reduced all the time that you spent fixing problems. So that's the strategic planning exercise. We've pulled a lot of this stuff and a lot of the other things we've talked to today into what we call the A4G Breakthrough and Recovery Program. So, you know, 1 or 2 of you may have a finance director, but most owner-managed businesses, unless you're sort of up in the 9-10 million turnover bracket, you won't have an FD on board, and you know, we will fulfil that function in many cases. And this is a program that we can deliver for businesses anywhere up to that size, where we'll just go through. First thing we'll do, what's your break-even point? What should your average daily turnover be? Now we'll work on a profit improvement plan. Can we streamline the financial processes, improve the reporting to you, address some of your short, medium-term cash flow problems, build a sales and marketing strategy that's going to help grow the business, and develop a strategic plan for your business. And lastly, it says provide support and focus. It's actually nag you to get it done, because it's so easy to have this plan and then get back to the daily grind and just be stuck doing the stuff that you've always done. So that's the Breakthrough Recovery Program. If you want to find out any details about that, then you can email myself or Emma. I've also got the details of from Mary and Brian there as well. I know there were 1 or 2 questions. I will have to put the glasses back on again to read those. Let me have a quick look. See them on my phone. And so there's a few questions there. The first one is for me, actually. I'm just going to, I'll answer it and then I'll shut up, really. What did you mean by return on investment on marketing? Okay, so return on investment is a bit of an accountant-y term. If you imagine you were buying some shares or some a property, you know, you'd be looking at what income you were getting compared to what you were spending. You should do exactly the same thing with your marketing. You should be thinking about all the time that you're spending and you know, the other costs. There might be external parties that you're paying, and then think about what return you're getting, because there might be some very cheap things to do that get, you know, that get a good return, or there might be something that is just going to cost you so much money to do that it's not worth that return. So the second question, I think one for Mary, if you want to unmute yourself there. How can I get rid of the bad apples?
Well, I think the first thing I'll say is, before you decide they're actually a bad apple, to really look at the situation. Because if you recall the case study I shared with you, it could have been very easy for Malcolm, who I was referring to, even though I didn't mention his name, to have said, this is a bad apple. I mean, she left, she came back, we put her here, we put her there, she's still not happy, you should be grateful. So I think before you decide the person is really a bad apple, to really consider and explore, have a chat with them, find out what the problem is. Are they not happy in their role? How can you support them? I do appreciate, obviously, you could have that situation where somebody really is not happy in the firm and they're not supposed to be there, and you have to make that tough decision of getting rid of them. Then that's something you're going to have to do, obviously following the correct procedures with, speaking to your HR department or your employment solicitor, make sure it's all done correctly, you have all the consultations, etc. But I think the first thing to do would really to get down to the root of the issue and to actually determine whether it's just that the person is not placed in the right position, or it could be some other problem rather than them being a bad apple.
Thank you for that. I managed to dismiss all of the questions that were on there, but my memory is good enough to remember that one of them was a question about QuickBooks, which I think was probably for Emma.
Yeah, so I'll tell you a bit about, so I mean, other than the adverts that suggests that you should just submit your own taxes via the app, regardless of how good you are at accounting and tax, scares me as an accountant, because I'm sure there's many businesses that if they try that, they'll end up with some nasty inquiries. But QuickBooks so it doesn't have as many of the apps and things that can add to it for Xero. I just feel Xero are leading the way in terms of development and changes, and they've got a different dynamic to a lot of software companies, whereas they put things out that aren't completely finished, but they want customer feedback from business owners to make everything they do better and more relevant to what you want rather than what we want as an accountant. So that's why I prefer that. But QuickBooks certainly ranks, particularly QuickBooks Online, ranks more highly than the Sage Online version. So Xero and QuickBooks do sit above the Sage Online version for clients. But I mean, we work with all the softwares at A4G, so I'm happy to talk to anyone about the the choices and what's best for the business.
And Emma, is that right that the only add-on products that go with QuickBooks are actually QuickBooks bits of software, whereas with Xero they are bits of software made by hundreds of other companies that Xero help connect up? Is that right?
Yeah, well, so QuickBooks have started allowing other things to integrate with them, but it's slower progress than Xero. So Xero's like open source, so anyone can design something that works with Xero. But some of the other softwares are a little bit more protective about that. But it's just slightly slower. So again, it just depends on what the business needs.
Right. So thanks for that, Emma. Thanks, Mary. I've just got one quick question for Brian, so which is my question really. When do you actually envisage everybody being back shaking hands or bumping elbows or having breakfast together at networking events?
Yeah, all of which we need, not least of all me, Malcolm. So, yeah, it's been a very popular question, actually, over the last few weeks. And I've just instigated the process to get that happening. The easy answer is 1st of September, basically. So I think the first meeting after the 1st is probably Dartford on the 3rd, and then Medway and Maidstone groups will follow the next week. But basically from the 1st of September, we should be back in all 3 venues with little or no restrictions, basically. So yeah, we're ready. We're working towards it. It's a fairly huge task, but we're getting there.
Okay. Brilliant. Well, thank you ever so much, Brian. Your details are appearing on screen for everybody if anybody would like to join the networks. Thank you so much, Mary. That was a brilliant presentation. Thanks again, Emma, as always. Really good. And thank you to everybody for watching us. If you want to get in touch, all our details are there, and maybe we'll see you again soon. Thank you.